Welcome back. Now, Max Financial's APE grew 16% during the second quarter, while its VNB margins also expanded. To discuss the quarter gone by and the way forward, we are now being joined by Sumit Madan, who is the MD and CEO at Axis Max Life Insurance. So, Sumit, thank you for joining in. Your VNB has grown by 27%. Your APE is up 15% this quarter, at least in the first half of this year. And H2 is generally stronger compared to the first half. So what are the kind of growth levels that you are penciling in both for your APE growth and for your VNB growth?
Thank you for having me. I think we've had a good run in H1. There've been a lot of movement as far as the market is concerned. But when you look at the numbers across channels have been exceptionally strong. Our VNB, like you rightly mentioned, has grown at 27% for the H1 period. Even when I look at the margin, they've been in the tune of 23.3 for H1 period. So yeah, across channels, there is a very good growth. We've always maintained that when it comes to industry, and yes, H2 is always far more stronger. When it comes to industry, we are maintaining our margin estimates. And even in terms of growth, we should come better than the industry by almost around 300 to 500 bips when we end H2 as well.
So what is the industry growth currently, Sumit? And if you can give us a sense of, in this AP in first half, what was the contribution that came in from Axis Bank? And do you expect that to improve or reduce in the second half?
Sure. The growth that we have seen in H1 is 18%. When you compare this number with the industry growth, the private industry has actually grown at 8%. But when you look at the entire industry put together has grown at only 2%. So we maintain quite a healthy lead, not over the entire industry, but also when you look at the private industry as one cohort. So the growth is strong. Like I mentioned earlier, the growth is coming across all channels, including Axis Bank. We've been building our partnership business very strongly, and the proprietary business has always been one of the key strengths for us. If you look at the proprietary business, it contributes almost 46% to the entire kitty for us. Axis Bank, in an overall sense, is around 40% for us.
Got that. And on VNB, there was a sharp expansion to over 25%. I mean, as a number. Is that sustainable? And two, what was the impact on account of GST in Q2 and what are the offset mechanisms?
That's true. The number is correct that you mentioned. In Q2, the VNB came at 25%, but when you look at the entire H1, the VNB is at 27%. This number, yes, is very much sustainable. There've been a lot of work which has happened post the GST 2.0 changes. I have to say that post GST 2.0, which I personally believe is a step in the right direction, because given the low penetration levels in India, it makes insurance far more affordable. So I think some of those changes were necessitated. We've seen a very strong momentum as far as protection as a business is concerned. So when the FM also did the initial call post the GST changes, the entire idea was to just increase the pie, reach insurance to the unserved, reach insurance to far more location. I think that seems to be coming pretty much true, given the strong traction we've seen around the protection business in the last 9 to 10 weeks.
Sorry, so you're saying VNB margins in H1 were 27%? Our calculation shows it was 23.3%.
No, the margins were 23.3. You're right. In Q2, the margins were 25.5. You're absolutely right.
Got that. And for the full year, VNB margins should sustain around 24-25%?
Yes, that's correct. The VNB margins should be able to.
The GST impact, I believe, dragged your margins by 300 to 350 basis points. I mean, that's the estimate that you expect on account of the GST input credit for the full. Can you explain what happened? Yeah.
Sure, I'll do that. See, the impact on profit is largely on account of GST. But what typically happens is when you look at this kind of an impact, some of your costs, some of your other growth, you may just postpone for a bit. So let's say the entire focus on opening new offices may have been postponed for a while. So it would not be correct to give an exact number around this. But yeah, largely the impact on the profits that you see is more on account of the GST changes.
So you mentioned on the earnings call, Sumit, that your margins would be impacted by 300 to 350 bips, right? If there is no mitigating action that is taken.
That's correct.
So in that case, where do you see margins stabilizing now while you exit the year at the second half? What are the kind of normal levels that you would be expecting, including this impact if it happens, and if there are any steps that are taken? If not, what happens to those margins then?
I think you're absolutely right. Had we not taken any kind of action, the margin pressure would have been around 300 bips. Happy to tell you there have been a lot of steps that we've taken within the company. And of course, our distributors have been more than helpful around this. So whether it's distributor renegotiation, some steps we've taken around costs, some more steps around the product mix, happy to tell you we should be able to maintain the same margins that we are currently clocking.
So, Sumit, when you say you have taken some steps with the distributors, does it mean you've passed on the commission cuts to distributors or you're planning to retain it? Also, what is the strategy here generally? Because the indication was with Policy Bazaar particularly, there could be something negative for the distributor community overall. If you can explain what's happening in the industry here.
Yeah, I think everyone understands the intent of the government. I think our discussions with all the distributors have been in the same direction. Most of the distributors, for example, have been very willing in terms of accommodating to some of the changes, including Policy Bazaar and all the other players in the market. The discussions are moving in a very positive direction. Some of the discussions may still be WIP, but look pretty reasonable, quite optimistic on that.
What are your plans to integrate Max Financial and Max Life, Sumit?
Yeah, very much on the cards. We are also waiting for some of the proposals to come in the winter bill. Some of the action was supposed to come in the monsoon session of the parliament, but now that it's got postponed very much, we are ready for it. We're just waiting for some of the directions to come from the government.
So if reverse merger doesn't happen in this case because of Section 35 of the Insurance Act, what happens? Will there be an IPO that the company is planning then? You must be having a plan B in case things don't go the way they are planned.
That's correct. Again, like I mentioned, very optimistic about that should come through. Even if it doesn't come through, the company is well prepared to take the next few steps.
Getting back to the GST impact, Sumit, what is the timeline to completely neutralize the impact? Is it 2 quarters? Will it take 6 quarters?
Yeah, to a very large extent, the way things are progressing right now, I'm very clear that in the next 1 or 2 quarters itself, all the impact should be nullified. And like I said, we've taken all the right steps. If you look at the overall performance of the company also across channels, given the strong momentum we have across all lines of the business, I think some of these are, I would say we've been able to manage them exceptionally well so far. So I don't see any immediate challenge in terms of navigating the path post GST 2.0, and that's the reason of the confidence.
So by Q4 FY26, the full impact should be mitigated. And your ULIP share came down to 34% versus 42% in H1 FY26. Where do you see is the share of ULIP and non-PAT by the end of FY26?
See, the current product mix that we have is actually more or less ideal where we want to be. So even by end of the financial year, to answer your question, we should be able to maintain the same product mix where we currently are.
Sumit, thank you for sparing time and joining us today. Wish you good luck for the second half of the year as well. Take a short break, get you more on the markets on the other side. Stay tuned.